Tyler, we're going to do something a little bit different here, and this might be a little similar to something you do over on your Misfit Alpha project where you take a look at recent IPOs. But what we're going to be doing is we're going to be taking a look at Intuitive Machines, tickers LUNR, like Lunar. Might be a little hint into what they do, but this is a first look for both of us. Neither of us have done a deep dive into this business, so we're looking to get our first reaction of the business, whether we think this might be a viable idea as a starting point to doing some research, and sharing our final thoughts here. Maybe 10 or 15 minutes for this video. If you're interested in Lunar and you haven't really taken a look at it, ride along with us. Share your thoughts with us too. Before we get into the details though, I'm Jason Hall. This is Investing Unscripted. That's Tyler Crow. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas than the research we're going to share with you right here, check out our special link. It's fool.com/unscripted. Go to that special link and you can get access to The Motley Fool's 10 best stocks to buy right now. It's a lot of value. Go check it out. You'll be happy that you did. Okay, Tyler, before we get going, tickers LUNR, Intuitive Machines. This was your idea that you brought to me. What is the business?
So it's a space stock, obviously, but trying to sift through what we'll call the fancy NASA speak and management speak through it. But basically, they build lunar modules that are adaptable in several ways to conduct experiments on the lunar surface. Basically, what happens is they have built this kind of interchangeable module that will land on the moon, and then either NASA or corporate clients or European Space Agency, basically anyone who wants to conduct an experiment on the lunar surface, they're going to be able to do so with this payload. This is the initial vision of the company and how they're getting their start. I think it seems like the longer term vision is to be one of the infrastructure builder of the moon should we ever start to build up a scientific presence or any sort of human presence on a more permanent basis on the moon. I know that sounds super futuristic, and from a business standpoint, you're like, wow, that sounds like a long ways off. But they actually are doing things right now, which makes it interesting because they've been sending lunar probes to the surface and have actually been earning contracts from NASA to do this work. So it's not like it's just some speculative idea that is on the back of a napkin. This is something that's actually happening.
That's actually one of the things I think that first brought this to your attention was this recent deal, August 29th. So we're recording this on September 5th. So it's basically a week ago, $117 million contract with NASA. $117 million is nothing for some of the big players in space, but for a company the size of Intuitive Machines, it's a lot of money. And so we're going to talk through some of the recent financial results in just a minute. Those results don't include this. And I think that's one of the things that I'm planning a little bit of foreshadowing here. This is one of the things that might make this a more attractive business on the financial results looking forward than it is right now. Let's talk about the people behind the company, because this is one of the things that also makes it a little bit appealing to me. Dr. Cam Jafarian, one of the co-founders, business has been around since 2013. This is not a brand new company. Cam Jafarian guess what? He's an engineer. When you're trying to put things in space, Tyler, having engineers involved is pretty important. Also, folks like Steve Altimus, who's the CEO, in addition to being one of the co-founders, spent a good bit of time in NASA. Again, pretty important to be tied to NASA. Is an alum of Embry-Riddle Aeronautical, which does a tremendous amount of training in aeronautics, largely known for pilot training, but they also have an aeronautical engineering program. Tim Crane, again, this is another person who's got a lot of experience working in the space industry. 25 years ago, almost started at Johnson Space Center, working for NASA. So to me, it's appealing when
I would say the big takeaway for me is if you look up and down the executive board and kind of the named executive officers, what you see is basically fingerprints of either NASA or some contractor, normally on the space or the defense side, who has significant contracts with NASA. And so you're getting people in this business who are probably a little bit more intimate with the way NASA runs versus probably a more cavalier kind of Silicon Valley approach to these sort of things, which some people will say the Silicon Valley model works, but when you're trying to contract with NASA and trying to deliver on the specifics of government contracts, sometimes knowing how those things work is pretty valuable.
The implications of move fast and break things is very different when you're developing software versus trying to put things in orbit. That's part of the takeaway for me as well there too. Having the science and engineering background for the business as a starting point, I think is really important to me to make this even remotely interesting. Tyler, next up, let's take a look at its most recent financial results. Again, it's still pretty, even though it's been around for a while, it's still pretty early in its startup phase. The financial results might not be that attractive, but I think they can give us some idea of where they are in their business and what the different parts of the business are.
Yeah, so I think right now, and we're thinking about what they have done so far, is run this delivery services where they have this. They call them payloads. I guess that's the more technical term. We would think of it as just kind of like lunar modules or whatever that they send to the moon surface and can use them for delivering whatever somebody kind of hires them to do. Just for example, their upcoming one is it's called the IM-2 mission, which is a lunar module coming up, and they have payloads from NASA to do like ice mining experiments, but they also have a couple like commercial backings for some reason. Like Columbia, the sportswear company, is signing up to do experiments on it as well. And so basically, what they can do to generate revenue is sign up people to or customers who want to do something on the moon for one reason or the other and use this payload as the vehicle to get their things there and to conduct the experiments that they want done. It's a relatively interesting concept. And certainly, if we are looking to start laying the groundwork for some sort of space infrastructure, it's an interesting way to do it. And as you mentioned with that recent NASA contract, that's for that specific contract is for 6 new payloads or 6 new actual lunar modules that will be headed to the surface over the next several years. So that it seems to be there is an appetite for this that I think for most of us who probably don't spend a whole lot of time in space, it sounds a little surprising that it's picking up steam as quickly as it is.
Let's take a little bit of a look at the financial results here. I'm going to share two things. First, I'm just going to share this snapshot of the highlights from their presentation. First half of the year revenue substantial from where it was a year ago. So we are seeing more that, like I said, those contracts are coming in and they're generating results on the top line. They're making progress. I think it's the first commercial company to ever put anything on the moon. So that's interesting trivia. Whether it turns out to be a first mover advantage, we're gonna find out about that. Added a lot to their backlog. Now, again, it's important to remember too, when these financial results came out, this was on August 13th that this came out, and it was a couple weeks before they announced the big contract with NASA. So this $70 million in backlog does not include the nearly $120 million with the deal that came from NASA. So we're seeing some signs of some progress there. But let's take a look. This is important because there's what you talk about and then there's what you do. So here's the actual operating statements for these first two columns here. This is 2023's second quarter that just ended second quarter. And then here's the first half of the year for 2023 and 2024, respectively. And the first thing that jumps out at me, Tyler, is so you have revenue here, $41.4 million in revenue in the quarter. And then you have cost of revenue, $57 million. So essentially, this should be where you get your gross margin, and that number's negative by over $15 million, right? So that's definitely a yellow flag that kind of jumps out. We look at the full year, still negative about $3.5 million, but negative nonetheless. This is before you start factoring in all of your operating expenses, general administrative, you can run your home office, your accounting, all that stuff that businesses need. And you're looking at a substantial and growing operating loss. So talk through that.
Yeah, I think that's expected. It seems like from a business perspective, like you said, they've sent one lunar module and they've recently sold out capacity on their second one. So this is very, very early in terms of the actual commercialization of this process. So what we're seeing, I guess you could say, is kind of expected. Obviously, being gross profitable would be better. Obviously not great, but at a business at this size and this early in its process, I think that's not a huge surprise. And this is the question that I would have, and this is kind of like the dumb investor who hasn't spent an immense amount of time in space, in the space sector, but is certainly intrigued by this, is how replicable is the process to build its lunar modules and how much scale can you actually get from building these things en masse? As you said, there's a 6 module contract coming up for NASA. How much of these things can actually kind of almost start to be built on an assembly line versus a custom build each time, which I assume would be much more expensive to do and inhibit the ability to actually like generate significant gross margin on it because it would be just, it seems to me like that would be a cost headache. is trying to custom build everything to meet a customer specification each time versus, I don't know, some sort of generic shell that they can build and mass produce for these projects.
And then you have modules for each of the specific things that you're doing. And here's the thing, we don't know that yet, right? That's one of the things that the company has to prove out is its ability to get operating leverage as it scales up through things like mass production, avoiding customization when it can, or demonstrating that it can charge a premium to cover that additional cost. And we don't know that. So, but what do we know now? We know what cash flows have looked like so far. So this is the cash flow statement for the first half of the year. And again, on the left, this is where we're going to focus. And we do know that it's more than doubled how much cash it's used to fund its operations so far through the year. But again, like you said, Tyler, this is not necessarily a yellow flag or a red flag. The company is spending money ahead of contracts that it's bringing online before it will be able to recognize revenue and cash flow from those contracts. So it's having to scale up its business, burning through cash to get there. So we know that's the reality. We also do know, we can look at the balance sheet too, we know how much slack it has, how much rope it has in terms of cash on its balance sheet and assets to leverage itself. And we do know that it's raised cash with different methods, mostly things like warrants, which are a form of equity. But it has some other equity investments we'll talk about too. But we also do know that it has less pure cash, had less pure cash at the end of the second quarter than it did at the same period a year ago. I'm going to go up to the balance sheet. So here we are with the balance sheet. So let's talk through what the company has in terms of working capital and total assets from where it is right now. So we'll start with current assets. This number is up about $52 million from where it was at the beginning of the year. Substantial increase in cash. And then receivables are up. Total assets, again, up about $50 million or so. But thinking about working capital, so current assets, $83 million minus current liabilities, $85 million has negative working capital, but it had negative working capital about a year ago. Total assets versus total liabilities, again, negative. Let's talk about what that means and whether or not you're concerned about it.
It's obviously not great. And it seems to me like this is going to be probably a cash burning business for quite some time. I don't think that's a shock, and obviously a huge ding for what this could be in the future. And there's also, as we kind of alluded to, there's a lot of kind of creative financing mechanisms that are being used because this was a SPAC that went live in 2023, didn't raise a whole lot of money that way, and perhaps why it's burning through cash the way it is, versus, I don't know, SPACs that went in 2021 and seemed to raise a lot of money. So it's using a lot of like hybrid securities from the initial private investors before the SPAC happened and using that as a vehicle for funding it now, which as a shareholder in the common stock is not great. I can't say I'm too encouraged by that. But, when it comes to these very, very young speculative companies, this seems to be par for the course lately. I think asking this company to not go public until it's actually profitable would be a very long time out and probably needed to raise cash in some way or the other. I don't know. It seems like an interesting story enough to me to stick around and watch a few quarters of financials, especially after this recent contract award. I think that's where I want to leave it right now. This isn't anything that I'm exactly chomping at the bit to buy right now, but all things considered, interesting enough, let's say, to keep watching.
I think you're right, Tyler, particularly when you think about how the market is valuing it, right? So yes, there are certainly concerns right now because it's in the startup phase where it's burning cash, but there's positive signs. We mentioned the NASA deal that we'll see if that's going to be enough of a push to get it to where it's cash flow neutral as it's scaling up, and then maybe potentially cash flow positive at some point along the way too. We're going to find out about their ability to do that. Here's the key, $324 million market cap. It feels like it's appropriately valued. I'm going to put enterprise value on here too, because there are some other equity investments on there. There's warrants, and then the other ownership in the LLC that owns public shares. That's basically a private investment that can be converted to public shares. So you look at it at enterprise value and still $522 million. It doesn't feel like this is wildly speculatively overvalued. Yes, still a very speculative business, but trading at a valuation that if the business delivers, if it starts generating cash flow, this could be one of the space stocks that really turns out a big winner for investors. But I want to see more evidence. I want to see some proof in the proof of concept. What NASA signed up for certainly gives it some runway in terms of cash and some ability to prove out its concept even more. I'm not ready to buy after spending 20 minutes here on video with you taking a look at it, but it's definitely one that I think is a research stock for me, and we'll take a closer look. How about we come back after the next quarter once it starts putting up some launches with the results? How about let's keep taking a look at this one as it starts moving from awarded contracts to actually generating revenue, recognized revenue for putting more stuff on the moon. We'll keep taking a closer look. What do you say?
Sounds good to me.